Let's follow the money. We're going to cut through the noise and look at where the biggest bets are being placed right now. $28,779,436. That's not a company's market cap. That is the total amount of money at risk on a single future political outcome. We're talking about a massive, high-conviction bet. And there it is. The single biggest market we're tracking is for the 2028 Democratic presidential nominee. Now, while politics is drawing this insane amount of capital, there is a major contradiction brewing in the economic data that you have to see. So let's dive into this $28 million bet. This is where the money is speaking the loudest, and it's not a poll, it's a real financial consensus being built years ahead of schedule. The market is pricing Gavin Newsom as the clear Democratic frontrunner at 36%. And on the other side of the aisle, J.D. Vance with a 50% chance for the Republican nomination. What's kind of wild here is the conviction behind these two names so far out from an election. It really makes you wonder, what does the market see that maybe the rest of us are missing? And that's the whole point, right? This isn't just a fun bet. It's the market literally trying to price in future policy, future regulations years in advance. What does that mean for the economy, for certain sectors? It's a huge deal. Drop a like and share if you find this valuable. Okay, so that political certainty leads us right into the biggest puzzle in the markets today. We're talking about a major disconnect between what the Federal Reserve is expected to do and what the stock market is actually pricing in. And this just lays it out perfectly. On one side, the market is pricing in a 68% chance of a rate cut this December. And get this, a 71% chance of 3 full cuts in 2025. I mean, normally that would be rocket fuel for stocks, right? But look at the other side. S&P 500 price targets are completely flat. The rally is nowhere to be found. So let's break it down. Cause and effect. Cause, the market is screaming for Fed rate cuts. Effect, the stock market is shrugging its shoulders. The implication here is powerful. It means traders think there's something lurking under the surface, some kind of economic weakness so serious that even a flood of cheaper money can't fix it. Be sure to subscribe to the YouTube channel so you don't miss our updates on this. And this idea of an underlying fear is a theme we're going to see again. Now let's shift gears from the macroeconomy to the tech world, because here the market is signaling that one of the biggest races of our generation might already be over. I mean, that's a bold statement, right? But it's backed by some serious cash. The consensus view is that we already have a winner, and they're just pulling away from the pack. 88%. That is the market's implied probability that Google's Gemini will be the top-performing AI model at the end of 2025. And this isn't some tiny speculative market. We're talking over $9 million in trading volume backing this up. So if the market is right, if the winner is already crowned, it begs the question, what's next? Where will the real money be made in AI? Is it in the applications built on top of the winner, or is there another disruptor out there nobody sees coming? Follow us on Twitter for more updates as we track this. It's a huge question. Okay, let's pivot again, this time from AI to crypto, where a cool $25 million are being wagered on Bitcoin's next big move. So if you're expecting a massive Bitcoin rally to a new all-time high this year, you might want to look at this. The market is pricing in a 57% chance that Bitcoin stays below $80,000. The odds of a huge breakout past 130K? Only 8%. The big money just isn't positioned for it. And if that wasn't clear enough, check this out. In a direct head-to-head bet, the market is giving gold a staggering 96% chance of outperforming Bitcoin this year. That is a massive signal of a potential flight to safety, back to old-school, traditional assets. All right, for our last section of data, we're looking at the wild cards. These are the low-probability, high-impact events, the black swan bets that smart money is keeping an eye on. A U.S. recession hitting this year? The market says just a 3% chance. A massive 8.0 earthquake this month? Also 3%. President Trump leaving office this year? A tiny 1% probability. Now, these are long shots for sure, but here's the kicker. If any of these things actually happen, every single bet we've talked about today gets thrown right out the window. Drop a like and share if you're getting value from this data. So, we've looked at politics, economics, technology, and crypto. Let's step back and pull it all together. What is the one single story that all this data is telling us? It really boils down to a story of two extremes. On one side, in politics and tech, you have absolute conviction. The market thinks it knows who's going to lead and which platform will win. But on the other side, in economics and crypto, it's all about deep uncertainty, fear, and a desperate search for safety. Don't forget to subscribe to the YouTube channel to stay on top of these trends. And that leaves us with the ultimate question, doesn't it? When the market is showing total certainty about the long-term future of politics and tech, but is terrified about the short-term economy, where do you put your money? That's the core tension we're all facing. Subscribe and drop a like below, follow us on X for more updates, and we'll see you in the next one.